There we go. I'm going to start the live transcript as well. All right. Well, perfect, folks. Well, welcome. Today, we're going to be talking about the Public Service Loan Forgiveness Program, along with its temporary waiver as well. And so because we have a lot to cover today, we're going to dive right in. And so, Hannah, I will kick it off to you, and we'll do some introductions here.
Sounds good. I'm Hannah Achtor. I'm the manager of quality assurance, compliance, and training at Ascendium. That is the company that powers the Attigo brand you're going to see referenced at the bottom of a lot of the slides we use today. I'm a certified financial education instructor and have been teaching about student loan repayment options for nearly 20 years now. Happy to be able to help share some of the things I've learned with you.
Thank you, Hannah. And my name is Emma. It's nice to be here with all of you. And I'm the Director of Financial Wellness and Financial Aid Advising for the School of Medicine and Public Health here at UW-Madison. I'm also an accredited financial counselor, and I'm also working towards the Certified Financial Planner designation as well. So I work part-time at an hourly financial planning firm on the side. And Benjamin, we'll kick it off to you.
Hey all, I'm Benjamin Lee, Associate Counsel at Ascendium Education. So I have the pleasure of having Hannah as a coworker. Been in the student loan space since about 2014, and I'm over 7 years deep on my personal public service loan forgiveness journey. So interested in it professionally, personally, on all levels. Happy to help how we can today.
And Hannah and Benjamin are huge, like awesome resources on the PSLF program. I thought I knew quite a bit, but they know so much more than I do. So I'm super excited to be here with them today. And so how today will go, just some quick heads ups. We do have both the chat feature and the Q&A feature running. So please use the Q&A feature for questions, and then feel free to use the chat for any comments, discussion, reactions, things like that. Because we have 301 people on this webinar, which is pretty amazing. Benjamin is going to do what he can to be filtering through the Q&A and answering questions as we go along here.
Right, Emma, sorry to interrupt. I've got a dense question. How do I see the Q&A? How do I access that?
Oh yeah, here, let me see. Oh,
That's a good question. I wasn't seeing it this round either.
Oh, weird. Okay, one second. Let me see if I can change that setting really quick. If not, we can always use the chat too, and that's totally fine. Maybe we should just do that for today. I'm not sure why.
That works too.
Yes, is that okay with you, Benjamin? Okay.
Yeah,
well,
absolutely.
So sorry about that, folks. That was my bad. Let's just use the chat for today. If you can limit the amount of comments, then so then Benjamin can do his best to read through the chat as we go along, that would be super helpful. And if we do get a question that stumps us, we will mark down the question and we will reach back out with a response too, because sometimes it's inevitable that we'll get a question or two that stumps us along the way. And then as we go through today's presentation, we do have these built-in blocks where we'll pause and we'll stop and we'll take some questions as well. And last but not least, please make yourselves comfortable because we have a lot of material to get through today. And so the presentation will cover what the Public Service Loan Forgiveness Program is, how to remain in good standing as you work towards the requirements, how you actually apply for the program, and then we'll dive in a little bit in terms of what is included in the temporary waiver and how more borrowers might be impacted and now might be eligible as a result of the waiver. And then towards the end, we will talk about whether or not it's a good fit. And then we'll go through some case studies and leave some time for questions at the end as well. And so just a quick disclaimer, as we already know, this program and student loan repayment policy can change very quickly and it changes very often. And so everything that we are presenting on is what we know to be true today, which is February 3rd of 2022. As things change, you know, everyone here is going to get a copy of this recording and then the slides and additional resources. And we have 2 slides at the very end with a ton of helpful resources linked, and using those resources often will help you stay on top of any changes that do occur after today's presentation. But without further ado, I'll kick it off to you, Hannah.
Great, thank you. One general housekeeping item is I am presenting from my house and I have the world's loudest dog. So if you hear a dog barking in the background, there's a chance it's mine. There's also a chance it's Emma's. There's also a chance it's Benjamin's. All of us have dogs. So that's just the new world we're in where we're working from home. So I figure I'd just throw that out there now. If you hear a dog, it could be mine. Hopefully not. But we'll get started. So what is public service loan forgiveness? And I mean, that's going to be what we dedicate ourselves to today, and we'll be answering that question on many levels throughout the presentation. I always feel like a good place to start. I see Jack coming through. Can you see the dogs? Hey, if I do this right, no, but we'll see. They may crash us. We never know. But if I do this right, you guys are going to learn a ton about public service loan forgiveness. But I think it's always good to start just with a little bit of history, and I will try to limit it so I don't bore anybody. But it's important to know that this started in 2007 or originated in 2007 because that date's going to be referenced later throughout the presentation. And it came out of the College Cost Reduction Act. And the idea at the time was there was a fear that we were losing top talent to the private sector where salaries would be higher and benefits may be better. So they needed to do something to recruit people into the public sector, into that public service field, so we could keep top talent. And with student loans being so overwhelming for so many Americans, this was a great place to start, knowing that you could enter into public service and then see that student loan debt forgiven at some point. So that's the idea behind the program and a little bit of history. Now here is the actual definition. The Public Service Loan Forgiveness Program forgives the remaining balance tax-free on direct loans after 120 qualifying monthly payments have been made under a qualifying repayment plan while working full-time for a qualifying employer. So just like public service loan forgiveness is a mouthful, so is the actual definition. And while you're at first glancing at it, it may seem simple enough, but there's a lot going on in this definition and 4 or 5 components that a student loan borrower must meet in order to qualify for forgiveness. So it's not just one of these things, it's all of these things. So we'll break it down a little bit further on the coming slides so you can understand each component. So first one, you have to have an eligible loan. So any loan received under the William D. Federal Direct Loan Program is eligible. Now I want to take a step back though and talk about the difference between loan types and loan programs. So a lot of you probably have a Stafford loan, which is a loan type, or a PLUS loan, which is also a loan type. And all of those loan types do qualify for public service loan forgiveness. And I'm going to start abbreviating it to PSLF because it's so much to say. So all of those loan types do qualify for PSLF. However, they may not be in the right loan program. So there are different federal student loan programs. There is the direct loan program, which is the most popular. That is the one that the majority, 85% of the student loans are coming from the direct loan program. So most of you probably do have direct loans. However, there are other loan programs. A big one is the Federal Perkins Loan Program. Another one is the Federal Family Education Loan Program, also called FELP. That program was also very popular at one time, but discontinued in 2010. So if you took out loans prior to 2010, you may have loans in that program. Only loans in the Federal Direct Loan Program count. The good news, though, is if you have loans in another federal program, you can consolidate into the direct loan program. And on the bottom in yellow, you can see to find out what type of loan you have and where your loans are at, you can go to studentaid.gov. That's also where you can go to consolidate. And to kind of expand on consolidation, because I know some people are like, what does that mean exactly? When you consolidate, you take out a new student loan. So you'd be taking out a new student loan in the Federal Direct Program, and it pays off all of your other student loans. So you have one loan, one place, and in this case, one direct loan, and now you can qualify for PSLF. Private loans are not eligible for PSLF. And I know sometimes the federal student loans just don't cover all of your educational needs, so you end up taking out private loans to make up for what you can't afford. There may be options on private loans. You would have to contact the lender that has the loan to find out what options are available. But for today and PSLF specifically, it has to be federal loans. Now, another component to the definition we looked at is it talked about qualifying monthly payments and how a person has to make so many qualifying monthly payments in order to do this. And all of those payments to be considered qualifying monthly payments have to be made after October 1st, 2007. And that goes back to the history lesson I gave earlier. That's when this College Cost Reduction Act, went through. That's when this program started. And therefore, any payments made prior to 2007 do not count. The payments have to be normally for the full amount due as shown on the bill, meaning you have to pay your full monthly payment in order for them to count. Paid no later than 15 days after the due date, so they have to be on time. And all of this is while employed full-time by a qualifying employer. And I mean, that's going to be the heart of this, is you have to work for the right employer, which we will get into. Now, diving into these qualifying monthly payments a bit further, there has to be 120 monthly payments made before the rest of the loan balance could be forgiven. If you're doing quick math in your head, that is 10 years. So this is not a quick, easy overnight fix. You're not going to have your student loans forgiven tomorrow in this program. However, you make payments for 10 years and then they forgive whatever's left over. And then only payments made on a qualifying repayment plan count. So I'm sure a lot of you have seen negative press about PSLF and how many people have been rejected for this program in the past. And one of the big sticking points was they were not on the right repayment plan, nor did they know they needed to switch repayment plans. So Emma and I are definitely going to go over which repayment plans count, which repayment plans don't. So this way you know which repayment plan you need to be on. Another thing I want to mention though is, there's a lot of press about people getting rejected and nobody getting this forgiveness to go through. Keep in mind, with this only starting in 2007, the first people who became eligible, were just in 2017. So it hasn't been around for long enough to have that many people become eligible to see forgiveness in the end. We're just starting to get there now, and some recent changes are making it easier on participants in the program. Now, lump sum payments are allowed. They didn't used to be, and this means that you can pay ahead by combining several payments and making them all at once, but you can only pay ahead for up to a year at a time. And I'll expand on that as we continue through the presentation, just to explain kind of why and what that really means. Months spent in the current payment suspension do count as qualifying payments as long as the employment requirements are met. So I'm sure many of you know, ever since March of 2020 with the CARES Act, there has been a payment suspension put in place on federally held student loans, meaning no payments are required right now. And there was a lot of concern when they first came out with that payment suspension that that was going to delay borrowers seeking PSLF even further. Because if they had to make 120 payments and now they're not even required to make payments, how many more years is it going to take to get to forgiveness? They quickly clarified that the months spent in this payment suspension will count as qualifying payments. So even if you're not making payments, it's okay. They're still counting as qualifying payments. And this is really great news, because if you think about it, we're coming up on 2 years of a payment suspension. So that is 24 monthly payments that everybody's going to have underneath their belt, working towards that 120 payment total without actually even having to pay anything. So that's been really good news. Also, borrowers whose loans are paid by AmeriCorps, Peace Corps, or the U.S. Department of Defense have special rules that allow these payments to count towards this forgiveness. So to explain that a little bit further, for borrowers who go into the military, sometimes they make an agreement with the military to say, hey, if I join, and I use the Marines as an example, but if I join the Marines, I want you to pay back a certain amount towards my student loans. And the Marines will agree to that. So then it's usually about once a year, the military will send in a payment for that borrower. So in this case, the borrower is not even making those payments themselves. The military is, and it's a lump sum payment, but it is still counting as a qualifying monthly payment for however many monthly payments it covers. So if you're in one of those programs and payments are being made on your behalf, those payments count too. Now the qualifying repayment plans. As I mentioned, this has been a big sticking point. People didn't know they needed to be on certain repayment plans. So as we got to 2017 and people first started to hit that 10-year mark where they thought, hey, I've made so many payments, I should now finally be able to get my loan forgiven. There were a number of
So Hannah, if you're there, oh, maybe she's trying to dial back in.
Did she just freeze?
It was just her. I think everything else is.
Okay.
The
I
chat,
thought-
the chat is live.
Okay, good. I totally thought that it was me because our internet has been dropping, but I can just pick up.
Okay.
Hopefully she can get back on here too. And she paused right at the standard plan, right, Benjamin? I think
Correct.
she paused right there. Okay,
Yep.
perfect. So as Hannah was saying, sorry about that, folks. Thanks for bearing with us. This is like one of the biggest sticking points of the PSLF program has been needing to be on these different payment plans. And so for the first option there, the 10-year standard repayment, it qualifies, but the premise of that plan is that you would pay off your entire federal loan balance within the 10 years anyways. So you figure on the standard 10-year repayment plan, you would pay off your loans before they're ever forgiven. With the income-driven repayment plans, I'm going to talk more about this in the next slide. These are based on your income rather than on your debt level, which is really nice. So this is how folks are able to get maybe more affordable monthly payments. So there's the income-based repayment, the IBR plan, the income contingent repayment plan, the ICR plan, and then the pay-as-you-earn or pay, and then the revised pay-as-you-earn. And I am biased, but I love the pay and the repay plans. All right. So next one here. And so like we said, with the income-driven repayment plans, they're all based on your income rather than your debt level. And so how they determine that is based on your income and then your family size. And so they will look at the federal poverty guidelines for your state and family size to help calculate your discretionary income. And so then they cap it at that 10 to 15% of the discretionary income for most of these plans. And then if a borrower is on these plans and they're not pursuing PSLF, the current premise of these plans is that depending on which one you're on, after making 20 to 25 years of payments underneath one of those repayment plans, the remaining balance after that is forgiven. And so like we said, that is for non-PSLF participation. And so moving along to full-time qualification, because I know this is a really popular question we get, is that for full-time, a borrower must meet the employer's definition of full-time or work at least 30 hours per week, whichever is greater. And I think the best way to figure out if the hours that you work qualify is to talk to your employer, because they're going to be the ones signing off on the PSLF form. And what's nice about this is that maybe you're working 2 part-time PSLF eligible jobs. You can actually combine those to be full-time, just as long as those hours together are considered full-time, as long as you're working a combined average of at least 30 hours a week. So it does not need to only be in one job, but both jobs, if it is more than one, the jobs that you're working need to be qualifying employers for public service loan forgiveness. And I'm sorry, I think Hannah's texting me right now. So her computer is locked up, so hopefully she'll be able to join us soon. But in the meantime, we're going to keep going. And so for the qualifying employer, I know that we have a lot of UW-Madison employees in the room, and so UW-Madison is considered a qualifying employer. So it is federal, state, local, or tribal government organizations, not-for-profit organizations that have that are tax exempt under Section 501c3 of the Internal Revenue Code, and then AmeriCorps and Peace Corps also qualify. So I think the 501c3, that is, or like the federal, state, local, and tribal government, those tend to be the most popular, but certainly these are a few of them, and there's more in the next 2 slides as well. Because there are some private not-for-profit organizations that do provide, the services listed below there that also qualify for PSLF. And I think that one of the best ways to figure out if your employer qualifies or not is to go to studentaid.gov and then use the help tool, because what you can do within the help tool is enter in your employer's identification number, or EIN, which should either be on like a tax form, or if you do a quick Google search, you might be able to find it that way too. But once you enter in that EIN, it will either give you like a green check mark, meaning you're good to go, or a red, meaning that it might not be eligible, or maybe they potentially just don't have it in the system too. So that is a really easy and good way to check to see if your employer qualifies. And then there are also some other public services listed there as well. So like I said, if you're wondering if your employer qualifies or if your employers qualify, going to studentaid.gov and searching for that PSLF help tool will be super, super helpful in determining which of your employers qualify. Some examples of non-qualifying employers do include labor unions, partisan political organizations, and then for-profit organizations, including for-profit government contractors. So I see this sometimes in the healthcare industry where maybe an ER physician is working at an eligible hospital, but they're actually considered an independent contractor, meaning that they're a 1099 employee rather than a W-2 employee for the hospital. So when you are a 1099 employee, you technically would not be eligible because you are working for a for-profit contractor, potentially a for-profit government contractor. So that I think can be another really big sticking point for folks, which is why I wanted to call special attention to that today. All right, so this is our first pause for questions. So Benjamin, is there anything that you wanted to answer from the chat here?
Yeah, so first of all, if I've missed you, I apologize. I'm just hitting these as I see them as fast as possible. So if you haven't been heard, I guess just keep them coming. We'll also be able to accept emailed questions afterwards, and we'll make sure everybody gets an answer. A big thing I want to answer right away, if you have consolidated into a private loan, so the SoFis, Earnests, whatever of the world, those loans are not eligible, and any loan that paid off is not going to get touched by this relief. There isn't a sort of backwards undo part of this yet. That doesn't mean that it's impossible in the future that would happen, but it's not part of the PSLF waiver at this time. One other thing I just want to, a couple questions kind of circled around this. People are asking if certain employers qualify. Emma had great advice. Use that help tool on the website. Chances are someone else has already used your employer's ID, tax ID, and you can find out if your employer qualifies. And for those of you asking about contract work and that kind of thing, it's really all about whose name is on your paycheck. It doesn't necessarily make a whole lot of sense, right, if you're doing the same work, but it really is about who pays you. So if you're a contractor or a for-profit subsidiary of a nonprofit, that employment would not qualify. And it looks like I missed 18 messages while I was talking, so I'm going to get back to it.
No worries, Benjamin. And were there any that you wanted to address that were super popular in the chat really quick during this question break? I'm trying to go through them too as I can. All right. Oh man, lots of questions coming in here. Thanks everybody. This is a really popular session, so we really appreciate your patience as we try to monitor the chat the best way we can.
So I want to bring up one more that a couple people have asked now. If they've made payments during this payment pause, does that count twice since the payments were not required? The answer is no. So if you haven't made payments, it counts. And if you've made payments because you opted out of the pause and so you still had a monthly bill, those payments also count, but there's no sort of doubling up or getting ahead in the month count.
And Benjamin, correct me if I'm wrong, but for folks who have paid during this pause, are they still allowed to request a refund of those payments? Yeah,
any voluntary payment you've made during this pause, you can request a refund on. That's a good point, Emma. And I had the pleasure of telling someone who had like a $600 a month student loan payment that the 2 years of payments they had made to make sure they kept qualifying for PSLF, that they could request all of those back and still keep those qualifying monthly payments. So something to think about if you've been making payments this whole time. If you have direct loans, the payment pause, all those months count as qualifying payments, both under IDR plans and towards PSLF.
Awesome, thanks, Benjamin. So they'd be able to get a refund, but still have those months count towards PSLF payments, which is
correct.
Phenomenal. Yep, that's a huge deal.
It is.
Perfect. All right. We're going to keep going because we're going to talk a little bit more about how to maintain in good standing as you work towards the program. And then I'm also going to talk a little bit too about what happens if maybe up until this point you haven't been tracking, your progress towards PSLF, but now you'd like to, especially with this temporary waiver period, which we're also going to talk about in a little bit here too. So this is a really common question that comes up, is how do I, maintain good standing while I'm working towards these 10 years of qualifying payments? So I think the best thing, which is pretty straightforward here, is to maintain full-time status, working for a qualifying employer or qualifying employers, and making progress towards forgiveness, meaning being on the right repayment plan and having the right type of loans until your loans are forgiven, and making those qualifying payments. And like I said, everybody here will get a copy of these slides too. So we'll make sure that you have this information too, as you kind of just make sure that you're meeting all the requirements as you go along. I think one of the most important things here, and I know with this payment freeze the past 2 years, this has not been as important because you haven't needed to, but whenever you are on an income-driven repayment plan, you do have to recertify your income annually. And so as we talked about before, the qualifying repayment plans for PSLF include the standard 10-year plan, which you do not need to recertify your income for, but you do need to recertify your income every single year, anytime that you are on an income-driven repayment plan. So IBR, ICR, pay, or repay. What they do with that information then is they will look at the new information that you provide when you recertify your income, and then they will recalculate your monthly payment. And so they will tell you when it's time to recertify too. So usually they will send you a message on your servicer's, your account on your servicer's website, but I also see messages from myself on studentaid.gov too. So they will reach out to you when it's time to recertify. And if you forget to recertify, what they'll probably do is just kick you onto the standard plan. So it's likely that your payments would increase. So this is really, really important because like we said, the income-driven repayment plans help those payments be lower and more manageable. So they're typically lower than the standard plan. So it's really important to recertify your income annually so that way you can stay on these lovely IDR plans. But like I just mentioned, income certification has been totally paused for the past nearly 2 years now because payments have been paused and there was no need to update your income information. And so borrowers should not have been asked to recertify their income. And this is recent news too, with payments, starting again on May 2nd of 2022, we did get confirmation, and this is on studentaid.gov too, that you will not be asked to recertify your income before we enter this repayment period again. So what they would be planning on doing in that case is they would use whatever income information they had on file for you previously, and they would use that. So this is a really big deal and really good news for folks who maybe have seen an increase in their income since the payment freeze started or since they last recertified their income. And so the earliest you would be asked to recertify as of today would be November of 2022. But for folks whose income may be decreased since they last recertified their income, it would definitely be to your advantage to recertify your income, even though it's not required. And the goal of that would be to get a lower monthly payment, of course. And so if you're wondering what your monthly payments are supposed to be or might be or are going to be when we enter repayment, I think the best place to reach out to is definitely your student loan servicer. So they would be able to help give you a rough estimate in terms of what your monthly payments will be once we all go back into repayment on May 2nd. And then we'll give you a copy of the slides too, so you have all of these links too. But I have the linked page to how you can request to have your income re-examined for the IDR plan in the case that yours decreased. And this is really important too. So in addition to recertifying your income annually, I really want borrowers to be documenting their employment history. And so as a reminder, in order to make those PSLF eligible payments, you do need to be working full-time at an eligible employer or employers. And online, there is this lovely PSLF form that the PSLF help tool can help you fill out. And so what I tell students and colleagues and alumni that I work with is to fill this out at a minimum annually. And then on top of that, do it anytime you leave a job. So that way you capture your last few months at that employer that you plan on leaving. And then anytime you begin a job at an eligible employer. And then keep copies for yourself too, right? Because we just want you to have this information readily available. Oh, and I think Hannah's back. Let's see. There we go. I think Hannah's back. Maybe, we'll see.
Technology is fun. Yes, I had to call our help
Awesome.
desk. Apparently there was some error on our company's side that completely kicked me out. And
Oh my gosh.
But
Well,
we're back now.
Yes, thank you, Hannah. No worries. Yep, Benjamin and Jocelyn and I are covering, so I'll keep on going on, and then we can pass the next section off to you. But I'm so glad to see you back.
Yeah, works for me. Thank you.
Yes, but like I was saying, documenting your employer history is super, super important because it's really easy to forget about this part because this is not required annually the same way that recertifying your income is. And so I recommend doing it annually at a minimum. And so for folks who maybe have not been doing this, you can absolutely backtrack, but you will have to have your previous employer fill it out. So that can be a little bit time consuming. But you and your employer will need to fill it out together, and then you will need to submit it to the PSLF servicer. And so currently that is Fed loan servicing, but eventually, and we don't know when, we just know it will happen by the end of 2022, that is going to switch to MOHELA. But for now, it's Fed loan servicing. And so like I was saying, if you think you have made qualifying payments, but you have not been tracking your employer, that's perfectly okay, because thankfully with this, you can backtrack. And so every time you submit this form, you know, it will take a little bit, a few weeks to get processed. But then with this form, what the PSLF servicer will do is then they will update your PSLF eligible payment count. So every time you submit it, they'll then count your eligible payments. And so that's really important, because I think sometimes folks think that each month their, you know, their trophies or their account on or on Fed loan servicing rather will be updated, but it only gets updated every time you submit a PSLF form. And so for my UW colleagues, UW-Madison or UW system as a whole does have a standardized process for helping us fill out these forms. And so it's all linked back into a document in the knowledge base. But basically what we will have to do is still fill out the PSLF form on studentaid.gov that everybody else has to do. But then additionally, we have to fill out UW's specific PSLF verification form that I've linked here. And so you have to fill those out, fax them or mail them into UW shared services, and then you can either elect to have them send it right back to you, or they can send it into Fed loan servicing on your behalf. So there is a standardized process here at UW-Madison. And so I have all of the different documents linked there for you, so you can look at those afterwards. And questions, all right. Benjamin, how's the chat? It looks like it's still popular.
I can see those boxes just popping up.
Yeah, it's still popular. And Jocelyn, I apologize. I think for a while I thought I was responding to everyone, but it made me respond just to her. So I was furiously answering and people didn't even see it, which is embarrassing. So I'm trying to keep up. I'm sure we're missing people. A big thing to think about that a lot of people have asked is, okay, how do I do this? Really, you just need someone from HR or the closest thing that your employer has to HR to sign off on your employment certification form. If you don't have HR, do the next best thing, whether it's a boss or whoever handles your payroll, someone who can verify how long you've worked there and that you've been full-time. That should be enough.
And I think another common question too is like, what happens if I do forget to recertify my income? What they'll do is they'll kick you onto the standard repayment plan, which is a qualifying plan for PSLF, but your monthly payments will probably increase. And so that's where it's really good to stay on the IDR plan, because the goal with PSLF is to pay the least amount possible, because you're hoping for the rest to be forgiven after the end of making those 120 payments. So please do pay attention to those notices.
Yeah, the good news is that standard payments count. But basically, if you know that PSLF is your end game or likely end game, then the game is pay as little as possible, which means you should be in the most liberal IDR plan that makes sense for your loans in your situation.
I'm looking at the chat here, excuse me, just to see what else is coming up here. Oh yeah, did you want to talk about Parent Plus loans at all, Hannah or Benjamin, and how those kind of factor in here?
Hannah, you want to jump in on this one? I'll head to the chat.
Sure. So Parent Plus loans can do PSLF. They do qualify. Again, they have to be in the direct loan program. And there's actually kind of a trick to it for Parent Plus loans. So in order to be able to do PSLF, because you have to be on an income-driven repayment plan, that's about where I cut out before. So you have to be on an income-driven repayment plan. And a lot of times Parent Plus loans can't do the income-driven repayment plans. So this is where it kind of gets tricky. So a Parent Plus loan is a loan that a parent takes out to send their child to school. So it wouldn't be your own student loan, it would be your parents' loans, or for those of you who maybe are sending your children to school, maybe it's a loan you took out for your children. In order to be able to do PSLF on a Parent Plus loan, you first need to consolidate. So you'd want to consolidate. And then there is one specific income-driven repayment plan that Parent Plus loans can do, and that is the ICR plan, income contingent repayment. So you would first consolidate, and then you would do ICR. As we get into the waiver in a little while, that really has opened up the doors to a lot of more options for borrowers. The Parent Plus loans were excluded from the waiver, but they can still do PSLF. So there are some disadvantages to having a Parent Plus loan, but it does not mean they can't do PSLF. They can still do PSLF. They just need to consolidate first and then do the ICR plan.
Hey, is it okay if I jump in and just read some questions?
Absolutely.
I'm
Yeah.
good with
Please
that.
do, Jocelyn. Thank you so much.
Yeah, for sure. So here is one of the questions, and there's so many questions, so I appreciate everybody's patience. Somebody asked if they've been making payments under standard repayment for 6 years, and they weren't under an income-based repayment plan. Are they pretty much out of luck?
No.
Nope.
So standard payments do count. And one of the things with the standard plan is you can't stay on that plan and be able to do forgiveness, because if you stay on the standard plan after 10 years, you'll just pay off the loan on your own. And that's why you don't want to stay on the standard plan. But it's still, any payments you make on the standard plan still count as qualifying payments, because all borrowers do start off on the standard plan. So, you know, those 6 years you've spent on standard are going to count, and you'll have 6 years of payments under your belt. But you'll want to move to one of the other repayment plans, because you don't want to end up paying off your loan before there's a balance left to forgive. So that's the reason you want to get off the standard plan as soon as you can, but the 6 years of payments will count.
Awesome. Thank you so much. Here's another one. There was a lot of questions as to like which loans qualify, and folks were putting in the name of like their servicer. Is this a qualifying one? And here's one specific to make sure to see my, if you have Nelnet loan, does that not qualify as a federal loan? And you rewrite to a federal loan, do you have to wait 10 years again?
So Nelnet is a servicer of both direct loans and FEL loans. So you really would need to go to that studentaid.gov website to figure out, do you have a direct loan? Which if you have a direct loan, you're already good, because we know direct loans qualify. If you have what's the FEL loan, which is older, but probably taken out prior to 2010, you would need to consolidate in order for that loan to qualify. As we get into the waiver, though, that is the thing that we're talking about, this new thing coming, and that waiver means you don't have to start over as long as you consolidate by a specific date. And we're going to get into all those details. But certainly you want to consolidate if you have a FEL loan, and then you're good to go. And if you already have a direct loan, you just need to apply for PSLF and you're good to go.
Awesome. Here's another question. How do you ask for payments back that you've made during COVID?
You would just contact your servicer.
Should we keep going?
That's good. Yeah.
Okay. All right. So Hannah, I'll kick it off to you.
Great. I'll move forward, and I'll just apologize in advance. I have no idea what's covered the 20 minutes that I was frantically trying to get logged back in. So hopefully repetition is good, and that it just helps you get things down. I know Emma probably covered a lot on how to apply specifically for UW employees, because UW is such a great employer. They've already built in a process for their employees. But for just anybody in general, your general steps for applying are going to studentaid.gov first. This is the Department of Education's website. They've made it a one-stop shop for everything. So you can do consolidation here. You can find your student loans here. You can apply for income-driven repayment plans here. And then you can also apply for PSLF here. But you want to prepare ahead of time. So they have their own little tool here that you can apply for public service loan forgiveness through. However, it will time out if you don't do everything in one sitting. And this causes a lot of heartburn for people, because they're working away at it, and all of a sudden they realize they don't have a piece of information that they need. They go and find that piece of information, come back, and it has timed out and they have to start over. So prepare ahead of time. To do that, you're going to want to know your FSA ID. And if you do not know your FSA ID, you can get it at studentaid.gov. You just create an account right there. And then also you're going to want to know your federal employer identification number, the EIN. And certainly the UW has that for you, but also if you have a different employer, it's going to be on your W-2. That will have your EIN, or your human resources department or payroll. They'll also know the EIN, but just some basic things you want to do ahead of time to make sure you're ready for the application and it doesn't time out on you while you're going through it. And so the PSLF help tool is right there at studentaid.gov. And this is really a nice tool that the Department of Education recently created to make the process easier. It helps borrowers understand the requirements to it. And also when you enter in the EIN as you're going through this application, it's going to tell you right there if your employer qualifies. Don't panic if it doesn't recognize your employer. It's a robust database. It knows so many employers, but there are still some that I'm sure are falling through the cracks and are not part of that database. So if you get the green light and it's like, yes, we know your employer, awesome. You can move forward and feel, rest assured that your employer qualifies. If it says we don't recognize your employer, don't worry. You're going to still fill in the EIN. You're going to still continue on, and they're just going to have to do more checks behind the scenes to make sure that employer qualifies. It also is going to be able to assess whether or not your loans qualify. So when you enter in that FSA ID, now it knows who you are and it knows all of your student loans, and it's going to be able to like show you, these are the loans you have, these are the ones that qualify. And if there are loans that don't qualify, it'll show you that too, as well as next steps you would have to take. So for instance, if you have these FEL loans or Perkins loans that need to be consolidated into the direct loan program, you're going to see that they don't qualify, and then that's going to be your tip that they need to be consolidated into the direct loan program. And loans are going to, so as you go through this process, loans will automatically transfer to the PSLF servicer, which I'm not sure if we've covered or not, but there's one servicer that does all of the PSLF servicing. So they do this to ensure consistency in the handling of the program. So if every servicer handled PSLF, you might have issues where one maybe accepts certain criteria and others don't. Maybe they track payments differently. So the Department of Education has just decided one company needs to administer this program. And currently today it is Fed Loan Servicing. However, Fed Loan Servicing has announced plans to exit the industry this year. And therefore the announcement has been made that MOHELA is the servicer that will take that over. And all we know at this time is that loans that are in this program will transfer to MOHELA at some point in 2022, and borrowers will be notified as they transfer over. But I know I had that question that Jocelyn read off about somebody being at Nelnet. So I'm going to use them as an example. If you are at Nelnet right now, and you have not necessarily been recognized as filling out this application yet, so you fill out that PSLF application, you can use the help tool, and then once they go through the application and process it, they will automatically transfer your loan from Nelnet to the PSLF servicer. So maybe today it goes to Fed Loan Servicing, and then in a few months it might go to MOHELA, or maybe it'll go straight to MOHELA depending on when you fill out that application, but it'll go to the PSLF servicer from whoever services it now. And then I'd heard Emma, as I was clicking in, talking about like the trophies that show you how many qualifying payments you may have made. So not each servicer, but the PSLF servicer will keep track of each payment. And then you can just kind of log into their site, see how many payments you've made and where you are in the program. And then it's recommended to recertify employment annually. This way, again, they can update those trophies and you can see where you're at. And again, this was a flaw in the beginning because people thought they were working towards it and they weren't on the right repayment plan. So if you're doing this once a year, you'll see that update and you'll know you're on track. If you send in your employment certification and all of a sudden you don't see an advancement happen, then something went wrong and you know to call in and say, what's going on? Why did I not advance by so many payments? Why are my payments not being considered? And then you could find out if you do need to switch repayment plans. And then also, of course, if you change employers, you're going to want to fill one out then too, just to show the new employer. So another good breaking point. And I see the chat just flying again.
Jocelyn and Benjamin, are you getting like super popular questions that you want to address here?
Jocelyn, go ahead if there's anything you want to handle.
Yeah, and there are so many questions. It's like, okay, which one do I go with? Because they're all such great questions. How do I find out if Navient is an accepted program? And is there just a link where folks can see who their servicer? I'm assuming studentaid.gov.
Yes. Yep. If you log into studentaid.gov, it will automatically redirect you to your personalized dashboard where your servicer is listed. And then another question that I wanted to address that came up too is, if you switch from, Great Lakes or Nelnet to Fed Loan Servicing, does that restart the payment clock? And the answer to that is no. If you are just switching, you're not changing your loans at all, you're not doing anything else besides switching from one servicer to another, that does not restart the eligible payment count for the PSLF program.
Awesome. Somebody's asking what the difference is between public service loan forgiveness and temporary service loan forgiveness payments. And do a PSLF always has qualified payments?
Let's hold that one because I think that's coming up here in about 2 or 3 slides. So we will answer that question shortly.
Awesome.
All right, I'm gonna answer 2 real quick ones. So one was about taxes. PSLF loan amounts forgiven, not taxable. That's federal level. I've never heard of a state taxing it, so I don't think that that's something to worry about. As of right now, IDR forgiveness is to consider taxable income, but whether that is going to be true when people are actually reaching the end of 20 or 25 years of payments, I guess stay tuned and we'll see when we cross those those finish lines.
Yeah, I think my understanding is like, it was at the American Rescue Act where they said like maybe for the next 5 years, Benjamin, it won't be
Right.
taxed under IDR, but most people are not going to be eligible in the next 5 years. So we really don't know what it's going to be once
Yeah, I mean,
that lifts.
I would assume that they will eventually make it so that it is not a taxable, that's not considered taxable income once it's in the tax code, even for, you know, these limited 5 years. Usually the idea is that that just becomes permanent,
Permanent.
but they would still have to pass a law to make that true. And that hasn't happened just yet.
Thank you.
Here's another question I'll throw out. If you retire during this process, are you safe in the program?
So you have to be working for a qualifying employer when you go for the forgiveness at year 10 after your 120 payments are made. So if you retire before year 10, and Benjamin, correct me if I'm wrong, and before you finish the 120 years, I think that's going to hurt your chances, or the 120 payments, excuse me, not years. I think that's going to hurt your chances. You want to stay working up until that 10 years, that forgiveness.
Yeah, and if the question is, if you are retired and you think you've made 120, but you haven't gotten the forgiveness yet, Hannah's right that under the regulations, you need to actually still be working for a qualifying employer when you get the amount forgiven. But they've actually waived that provision, is my understanding, during the waiver period. So again, the take home message here is apply, apply, apply during the waiver period.
And I saw some questions in the chat about consolidation. So we're going to talk about that in a few slides too. And I think next up is a temporary waiver, right? Should we just head right into it? Because I think this is
Sounds
really,
good.
this
I think
is
we're
like,
heading into that with, yeah.
yep, exactly. I'll give it to you, Hannah.
It's good questions. You guys gave us a great segue into these PSLF improvements. So as we've mentioned, there's been a high number of applications rejected over the years and a lot of negative press because people were working towards this and something just didn't work out. And so the Department of Education heard that. They heard those concerns and they have made a number of improvements to make more borrowers be able to see forgiveness in the end. And so that's kind of speaking to this. I hear no one actually gets their loans forgiveness program. Why bother? Well, here you go. So we have this temporary public service loan forgiveness. Now, temporary expanded public service loan forgiveness, TEPSLF. This is different than the waiver we're talking about. This actually came out about 2 years ago, I want to say. And because people were starting to get rejected and they were being told it was because they were on the wrong repayment plan, a number of people came back and said, nobody ever told me. You know, my servicer knew I was working towards this. Why didn't they tell me I needed to switch repayment plans? Which is a valid question. So the Department of Education heard that and said, you know what, we will open up the door and say, if this is what happened to you, if you got to year 10, so this is specifically for people who already applied and who already got to year 10 and were rejected, apply again. And so they made a new box on the application itself. It's TEPSLF. You check that one, and that box indicates I have already been rejected for this once, and I want you to reconsider me because I was not told I needed to switch repayment plans. And so if that sounds like something that happened to you, then reapply, check TEPSLF when you do so. And this is limited because they only put so many funds into this, and they basically said they're just going to keep doing it until they run out of funds. However, there are ample funds in there today. So if you were rejected before, please apply again under TEPSLF. And then there's the waiver. And again, this is separate. So TEPSLF, that's just going to go until they run out of funds. This waiver goes until October 31st, 2022. And I mean, I think Emma, Benjamin, all of us are super excited about this because it opens the door and it advances so many borrowers forward so they can get closer to forgiveness. And so you can see it says borrowers may receive credit for past payments made that otherwise would not have qualified. And this means prior payments will count as qualifying payments no matter what repayment plan they were on. So any payments made will count. That means partial payments count. So even payments that weren't full monthly payments are counting. Late payments are counting. Payments made under different repayment plans are counting. And in many situations or circumstances, if a borrower has already applied for public service loan forgiveness, they're already at Fed loan servicing, so they're already working towards the program, they're just recalculating the payments for them. And the borrowers don't even have to do anything. The recalculations are just happening behind the scenes. So as this came out this fall, what we were seeing is some people would log in to Fed loan servicing one day and see that they had 36 qualifying payments. The next day they would log in and see that they have 60 qualifying payments. The recalculations just happen behind the scenes. Now for FEL and Perkins loans, what they're saying for those borrowers is as long as they consolidate into the direct loan program prior to October 31st, 2022, all past payments made in the Fell and Perkins loan program will count. This is huge. I was a Fell loan borrower. I worked for a nonprofit. I never went for PSLF because the way it was at the time, if I consolidated, I would have to start all over again. It wasn't worth it to me. I was already so many years into my student loan repayment when they came out with this program, and I did not want to start all over again. This is saying Fell loan borrowers and Perkins loans borrowers do not have to start all over again. They just have to consolidate into the direct loan program so they have a qualifying loan, and then they'll go back and give them credit for all the past payments made. So they could consolidate, and if they've been paying for 10 years already, they could see immediate forgiveness after consolidation. Now, first they consolidate though, and then they must complete the PSLF form, again by October 31st, 2022. So this way they know they're going for that public service loan forgiveness. Otherwise, they don't know everybody who consolidates is going for this program. So first consolidate, then do the PSLF application. Now, things at the bottom, employment qualifications have not changed. So you still need to work full-time for a qualifying employer. And Parent Plus loans, I mentioned this earlier, they were excluded from the waiver. This does not mean they can't do PSLF. It just means that past payments that wouldn't have been eligible are still not eligible. But any payments made under the right repayment plans, and again, that's where you consolidate and do ICR, those can still count.
And so I'm a visual person. Yeah, thank you.
Yeah.
Thanks, Hannah. And so I'm a visual person, and this is taken right off of the studentaid.gov's website and the portion of the website that talks about this limited waiver opportunity. Like Hannah said too, I cannot, emphasize this enough. This is a huge deal. I have been so excited ever since October when this was announced, because it really did open up, the public service loan forgiveness program to a lot more people. So this is super exciting, and so many people still don't know about it. So please, after today's webinar, please share these resources with your own networks, because so many people don't know that they now qualify. And so this graphic on the website does a really good job of sharing what the typical PSLF requirements were and what they will be again soon after this waiver expires, and then what they are now. And so for folks who are in the room who maybe already made 120 plus payments, anything you've paid additionally will be refunded to you, which is also another huge benefit. For folks who are interested in hearing more about success stories, I highly recommend that you check out the Public Service Loan Forgiveness subreddit on the Reddit community, REDDIT. Folks are posting every day about the refunds they're getting and the loans they're getting forgiven. So it's a really, really fantastic waiver. But the most important thing too to highlight is that this is temporary. So as of today, this is going to expire after October 31st of 2022. And so depending on the types of loans you have, there might be concrete steps that you need to take before this expires. And so we're going to talk about that too. And so, like I said, your to-do items really do depend on the types of loans you have. So it's not, not the servicer that you have, it's the types of loans. So when you go to studentaid.gov, and I have directions on the bottom of the screen here, these are directions in terms of how you can check to see what types of loans you have. So the biggest thing you want to be looking for is whether or not you have direct and or Fell loans and or Perkins loans. So please, after today's webinar, please go review the types of loans you have, because this will determine the next tangible to-do items on your list. And so if you have Fell loans, payments towards, and Perkins loans, payments towards these loans now qualify for PSLF underneath the temporary waiver. But, and I cannot emphasize this enough, you absolutely need to consolidate them into a direct consolidation loan by October 31st, 2022 to qualify. This is because, as a friendly reminder, that only direct loans are eligible for forgiveness in the PSLF program. So anytime someone consolidates, it takes the loans that you choose for consolidation and turns it into a brand new direct consolidation loan, which will make it eligible for forgiveness underneath the waiver. And originally, without this temporary waiver period, anytime someone consolidated, it would create that brand new loan, which would then unfortunately restart the payment count towards PSLF. Underneath this waiver, they have since gotten rid of that rule temporarily. So even though you consolidate, any eligible payment count that you may have made already on those loans previously towards PSLF, they don't restart, which is amazing. And so if you consolidate after this date of October 31st of 2022, unfortunately, you will not receive any credit for any past payments because the waiver will have expired. And that means that the clock would then restart again because you have a brand new loan. And so after you consolidate, like Hannah already said, you have to consolidate first, and then you absolutely need to submit the PSLF form using the PSLF help tool because they need to get documentation that you're working towards PSLF. And so if you, and so I talked about this, let's see, I'm trying to think about other things. And this is actually a really common question we get as well is, what loans do I consolidate? Do I take only my FEL loans, only my Perkins loans, or do I also want to consolidate any, loans that I may have previously consolidated or any direct loans I have? The really neat thing is when you consolidate, as long as the different loans and their repayment periods overlapped, what the servicer will do is they will take the highest payment count on your loans and allocate that payment count to the new direct consolidation loan. So it's really cool. So if you have different loans with different eligible payments, make sure that their repayment history overlapped, and then you can consolidate them, make them into a direct loan eligible for PSLF, and they will allocate that highest payment count to the loan. So it's a really big benefit as well. Anything else you want to mention right away, Hannah, on consolidating? I'm trying to think, yeah, because I feel like this can be a really big sticking point for folks as well.
No, I think you covered it. And again, we have it highlighted. It's just that October 31st date that's coming, and the idea that not only do you want to consolidate, but you want to make sure you submit the PSLF application. You need to do both prior to that October 31st date if you have a non-direct loan.
And so if you know that you need to consolidate, I would not wait. I wouldn't delay at all. I would apply for consolidation as soon as you can, because after you submit that consolidation application, it can take a few weeks up to a few months to hear back, especially right now because the loan servicers are super busy. And so this is just, I'm going to skip this because we talked about this, but it's just a screenshot verbatim from the studentaid.gov website talking about what happens when you consolidate different loans with different repayment counts. And just to reiterate, what they'll do is they'll take the highest payment count from all of those loans you consolidated and then allocate that count to the new direct consolidation loan. And so if you're someone that maybe has the right type of loans, maybe you only have direct loans and no Perkins loans, no FEL loans, but you have not submitted a PSLF form for tracking purposes, we highly recommend that you go to studentaid.gov and use the PSLF help tool to verify your eligible employment history and to help generate that PSLF form that you need to submit to Fed Loan Servicing with an asterisk. This is Fed Loan Servicing right now, but it's going to, change to MOHELA sometime in 2022 by October 31st of 2022. And maybe you're someone that has the right type of loans and you've already submitted a PSLF form. You may automatically receive credit for past payments that did not automatically count for PSLF. And so I think to be really safe, if you think you've made qualifying payments, but you haven't submitted one recently, I would just say, go ahead to studentaid.gov, use that PSLF help tool to generate that form and submit it. And always keep copies of any paperwork you submit for yourselves as well. All right, Jocelyn and Benjamin, questions?
So many
really
questions.
Busy section. Yeah.
Do folks need to make 120 consecutive payments?
Oh, that's a good question. You do not. So that's a great question. These payments do not need to be consecutive, but you do need to hit all of the requirements. So maybe someone works for a qualifying employer and they were making PSLF eligible payments, but maybe they switched to like a for-profit employer who didn't qualify and then came back to a nonprofit. That's totally okay. These do not need to be consecutive payments. That's a great question.
Another question, if you were working full-time for a qualifying employer from 08 to 11, making federal student loan payments on time, do those payments count automatically, or do you have to certify that employment first?
You would have to certify the employment because otherwise they just don't know. So therefore, you send it in, you certify it, and then they go and like, oh, okay, you were working for a qualifying employer from 2008 to 2011.
Yeah, one thing I want to say real quick that I think will help a lot of the questions on the chat. You could theoretically have qualifying payments and employment and do everything right for 10 whole years and never let your servicer know that you were interested in PSLF. And the second you send in that PSLF form, that's going to, behind the scenes, that's going to pull your loans to the PSLS servicer, and they will look at your form and see if you qualify. So all these things that they're talking about that Emma and Hannah are covering, these are sort of recommendations, right? Try to do it at least once a year. Make sure you get past employment up to date. Just because you've missed stuff in the past doesn't mean that it can't qualify going forward. And just because you haven't done anything so far doesn't mean that you've somehow missed out necessarily. It just means that you haven't submitted the form yet. Hopefully that helps
Yeah.
some people with questions.
For sure. I've seen some people wait until year 10, just not realizing that it would have been easier just to do it every year. So they wait until 10 years are done and then they submit, and fine, they still get that forgiveness to go through.
Yeah, I'm a big, well, I'm an attorney and also just neurotic. So tinfoil hat, even though my employment hasn't changed, I do it every year to make sure that the count is right and that everything is kind of how I want it to be. But that's just because that's how I am. You don't necessarily need to do that to qualify.
If I've never filled, oh, go ahead, sorry.
Oh, I was just going to say some medical students or residents and fellows might be on this call too. I just want to say that your time in training can absolutely be eligible for PSLF as long as you're meeting all those requirements. So many hospitals are considered qualifying employers, but not everyone. So you have to check using the PSLF help tool, but your time in a residency program or a fellowship program, that those years can absolutely count towards PSLF.
Another question, if I've never filled out a PSLF form, should I fill it out right away, then consolidate if needed, then submit the form again? Is there a limit to how many times it can be filled out in a year?
What do you both think on that? I'm trying to think of the best timing.
I mean, there's no limit, but it is a fragile system to begin with. So don't expect, they're struggling over there at FedLoan right now. Don't expect quick turnaround times on these right now. And I guess the one thing I want to say about consolidation only makes sense if you have a FEL loan or some other reason that you're consolidating, that there's these loans that normally wouldn't qualify, and you're trying to get them to qualify during the waiver. If you have direct loans, and I saw Jocelyn say this in the chat, but I want to reiterate it here. If you have only direct loans, there's really no reason for you to be consolidating. In fact, that could bizarrely work against you. So if you have only direct, do not worry about the consolidation step. Would you agree with that, Hannah?
Yes.
Okay.
And then you do the public service loan forgiveness application. That's all you would need to do.
Correct.
If you are in the bucket of needing to consolidate because you do have the FEL or direct loans, then you want to do that step first and then the PSLF application.
This might be opening up a can of worms, but what if you have different direct loans that have different payment counts on them? And so like they might be really uneven. Could they consolidate just to, could they consolidate those two consolidation loans or those direct loans together to get the higher payment count and just keep everything together?
You're going to the next level here. And I don't think I want to give advice on that because at least in the past, the department has said that you can't consolidate unless you have a non-direct one, like basically there's a reason to consolidate.
Right. Yep.
I don't know if during this period of time, if they're enforcing that or not. So theoretically you could maybe jump. The other thing I'm concerned about is that when they get FEL consolidations during the waiver period, they're looking back at the FEL payment history on NSLDS to see if they can check off qualifying payments, right? I don't know if they're necessarily doing that on a direct loan that's only consolidating direct to direct. I would assume they are, but since I don't know that, I wouldn't want to tell anyone to do that in the hopes of jumping ahead, basically.
Yeah, good advice. Thanks, Benjamin.
How's that for a lawyer answer for you guys?
Good.
Sorry.
No, that's perfect. That's great. Thank you. Well,
someone's asking in the chat. Oh,
let's do one more, Jocelyn. Go ahead. Go ahead.
One more.
Okay. Someone's asking, they're saying that are people able to choose their repayment plans? They're only seeing standard or graduated. They're not seeing the options for like income-based repayment plans.
You can choose income-driven repayment. That is a plan. So as you go, that is an option you can choose. As you go through the consolidation process, it usually comes up right there when you're doing consolidation that you can kind of link from the consolidation application to also fill out an income-driven repayment application. But if you're not seeing that, you can just call into your student loan servicer and say, hey, I'd like to apply for income-driven repayment. How do I do that? And they can walk you through it. In some cases, they can just email you a paper application and you can go that route.
All right, let's keep going. We got a little bit left.
Okay.
All right, Hannah.
Case studies. So sometimes it just helps to visualize it. Like, how does this work in the real world for real people? So I just put a few examples of people, what they make, and what impact it has on them. So we can go to the first one. Here we have Sarah. And with Sarah, she is single with no dependents, an $80,000 income, $60,000 in student loan debt at an average interest rate. Now, at the loan simulator tool at studentaid.gov, this calculators you can play around with, and I really love the loan simulator tool. It'll tell you what your monthly payments will be under the various plans. But using that tool for Sarah, it told us that her estimated monthly payments are going to be between $443 and $623 as she goes through the next 10 years. This is basing it off of her income. It's also a range because that calculator assumes that she'll see salary increases over the next 10 years. Also, there's like the highest payment it can possibly be under these income-driven plans. So all that's factored in, and that's why you see the range. But with that, it's saying that she's going to pay about $66,000 and some change on her own in that 10 years, which does seem like a lot of money. However, she's still looking at having over $11,000 forgiven, so it's less than she initially signed up for. And now some of you may be looking at that and thinking, wait, how is she going to end up paying $66,000 when she only took out $60,000? Remember, that's the interest. So any loan you take out, you're going to end up paying more than you initially took out in the long run because of that interest. But she'll still see some of her debt forgiven. And here we have Andre and Tina. They're married with 2 children. They file taxes jointly. And so their combined income is $75,000. One thing to keep in mind for most of the IDR plans, you're going to have to include your spouse's income, assuming you file taxes jointly. There are some exceptions to that. So if somebody was, filing as, I think, married but separate, there is the potential maybe to not have the spouse's income count, but there's a lot of tax implications with that. So a person really have to research where the bigger benefit is. Is it filing married but separate, or is it filing jointly because of the tax implications that could come with? But again, most of the time a spouse's income is going to count. I think most married couples do file jointly. And so in this case, Andre and Tina do, their combined income is $75,000. Now, they also would take both spouses' student loan debt into consideration when looking at those income-driven repayment plans and determining the monthly payment. If both Andre and Tina had student loans and they both worked for public service loan forgiveness, or both worked for public service employers, they could both potentially do this, but they would have to apply separately. Their loans are always kept separate. So, just for both of them to be able to do this, they'd both have to work for the right employer and they'd both have to send in an application. In this scenario, though, this is just Andre's student loan debt. So it's looking at both of their incomes, but just Andre's student loan debt. He has $35,000 in student loans at an average interest rate. And using that tool, it looks like his monthly payments would be between $241 and $274 throughout the 10 years. They're estimated to pay over $30,000 back themselves, but still have over $16,000 forgiven in the end. So a nice discount. And lastly, we have Jill. I love Jill because she's going to get the most bang for her buck out of any of these scenarios. So Jill is a single parent with 2 children. Her income annually is $45,000, so a little lower than what we've seen for the other examples. And her student loan debt is $50,000. Again, average debt load, average interest rate. Her estimated monthly payments are only $67 to $69 throughout the 10 years. Again, she's one income with 2 dependents. And so she's going to only pay a little over $8,000 as she's working towards this forgiveness and have over $57,000 forgiven. So she's definitely a great candidate. And if anybody's like listening that's in a similar situation, wow, apply for PSLF. This is going to do great things. And so as we're wrapping up, I'm sure a lot of you are just thinking to yourselves, is this a good fit for me? And hopefully the answer is yes, especially if you work for the UW, because you have a qualifying employer. And now we put up here common concerns people have as I do these presentations, things that come up. I think we've addressed these, but I've heard this program's going to be cut before I ever make 10 years of payments. The funding is going to be removed. That's just speculation. I don't think they can easily do that. That's written into law. And certainly the funding, gets approved by Congress every year. And it has been approved by Congress every year. This has been going on since 2007. So I don't really think that we have to worry about that. There's just as good a chance as it's going to continue on indefinitely as there is for it to be removed, especially with all the waiver and all the improvements they're making. Clearly, they're investing in this program, so I wouldn't worry about it getting cut. And then also, I think we've addressed, I'm sure there's going to be a huge tax at the end. There is no tax possible for PSLF. The way they wrote this specific option into regulation, they eliminated the possibility of a tax. And here's just kind of a recap of like the important things you need to remember moving forward. You have to be on an income-driven repayment plan. You know, right now until October 31st, 2022, they've kind of opened it up and say we're counting all payments. But the way this has been written originally was everybody has to be on an income-driven repayment plan. So if you're not on one now, you need to get on one quickly, because after October 31st, it's just going to go back to the way it was. And then again, after October 31st, in order for a payment to be considered a qualifying payment, it must be made on time. And there's a 15-day window for being considered to be on time. And then it must be working for a qualifying employer, which seems obvious. However, a number of the rejected applications were because the employers just weren't qualifying employers. And at the time the applications for forgiveness is submitted, so we talked about retirement, things like that. When you go for forgiveness, you need to be still working for that employer. So it's not one of those things where you get 10 years under your belt and you finally move on to your dream job and then you apply. Stay with your qualifying employer until you get that forgiveness. And be aware that deferments and forbearances will cause a delay. So there are a lot of deferments and forbearances available for people who fall on hard times. There's unemployment deferments and economic hardship deferments. And obviously all of you are familiar with in-school deferments. And it's okay to use those options if you have to. Like Emma said earlier, your payments do not have to be consecutive to be qualifying payments. So if you fall on hard times, you need to use an unemployment deferment, that's okay. But time spent in that deferment is not going to count. So use them sparingly, so this way you can get to the 120 qualifying payments faster. And then there are exceptions for this. One exception is the military deferment. So borrowers who are in the military and use deferments based on their active duty status, any time spent in an active duty deferment is still going to count as qualifying months towards those qualifying 120 qualifying payments. Also, the payment suspension as a result of the coronavirus pandemic, any time spent in that payment suspension also counts. So it's a wonderful time to apply. Again, we kind of just October 31st, apply now. As Emma mentioned, the processing time for consolidation and PSLF can be a little while. So if you need to do one of those like consolidation, get it done now. If you're already a direct loan, then just apply for the PSLF application so you can get all those past payments counted.
Yes, awesome. Thank you so much, Hannah. And I just wanted to scroll. That concludes the this presentation. Really quick though, like we said, everyone who registered and or attended this is going to get copies of our slides. Like some of our favorite links are linked at the very end of the slideshow, including my favorite online calculator that can help determine which repayment plan is best for you. Like I said, my two favorites are pay and repay, but it really depends on your specific scenario. So you're going to get a copy of this. And then for Wisconsin folks in the room, folks are working on this awesome tool specifically for those of us in Wisconsin who still have federal student loans. So we will send more information out about that as soon as it's ready. But going back a second here, I want to highlight our email addresses right here. So for folks who have questions, I think, whoopsies, sorry about that.
Too far back.
Too far back, I know, right? But I'm nervous. I feel like there we go.
Oh,
1 second, buddy.
Yeah.
There we go.
I tease. But at least your
Right.
whole computer system didn't crash for 20 minutes. So you're doing
Yes.
great.
Thank you for bearing with us, everybody. I feel like we had some technical glitches during this presentation, so we really appreciate your, oh my gosh, there we go. I'm gonna pause this really quick. We really appreciate your patience with us, especially with the chat too, because we know that we had like the interest in these sessions completely surpassed our expectations. So thank you so much for your patience with us too. And I'm just trying to pull up the.
And then Emma, as you get that slide up that has our email addresses